monsoons are early. What does that mean for you? What does that mean for your portfolio? What does that mean for FMCG companies? And what does that mean for stock market investors? Abneesh Roy, Executive Director with Nuvama Institutional Equities, joins us. Abneesh, let's understand the impact of early monsoon. Nobody complains when it rains early, right? And do you think market should also get excited about the fact that this year monsoons have come a good 2 to 3 weeks ahead of its schedule?
Yeah, thanks. Good morning to everyone. Yes, good monsoon and early monsoon is a good lead indicator. What is happening currently is in FMCG past few quarters, rural volume growth is around 6 to 7% for most FMCG categories, while for urban it is just 1 or 2% volume growth. So rural is doing well already. Now with good monsoon in most categories, it is a good news. Of course, in 1 or 2 categories, it is bad news also. For example, in terms of ice cream or carbonated beverages or talcum powder, it's a negative news because the temperature goes down in such categories in Q1 and possibly even in Q2, because this time the monsoon is going to be quite strong. We will see companies which are in ice creams or carbonated or talcum powder, they will see some impact, adverse impact there. But in most other categories, there will be 2, 3 things. One is the rural sentiments and the rural overall income levels hopefully will go up, because if there is a good monsoon, we'll see multiple impact, right? The crop productivity improves, and then the overall dairy income also increases because there is more fodder availability to the that part of the industry also. Only flip side is a strong monsoon also means that there could be flooding in few areas. So we have to see that also. But generally, yes, it is positive. So overall in FMCG, what we are seeing is the outlook given by almost every company in the Q4 call on the FY26 outlook on the revenue, volumes, and margins is positive. So that's a good lead indicator that yes, strong early monsoon generally should pan out well in terms of farm income, in terms of sentiment. Food inflation for the urban customer has come down, right? So if there's a good monsoon, generally that should also be positive. Flooding can negate that, so we'll have to monitor that also. Yes.
But isn't it too early to get excited? It's May, and rainfall in the month of July is more important than June, and we are talking about May. 2009, when we had early monsoon, that full year, because of weather disruptions, rainfall was below averages. So what looks good right now in terms of the early morning showers when they come and when you walk to drive to office, this could be a change in weather pattern and ultimately it could impact the full year average?
No, I will not be worried on less rains. If you see multiple independent agencies, this time I've said that it's going to be strong monsoon. So, for example, SkyMed, which generally gives a bit more conservative outlook than, say, IMD. Apart from that, even global weather agencies like the European forecaster, Australian forecaster have said that the monsoon in India will be good. What we need to see is there excess? Any excess is also bad. Flooding can hamper the logistics part, it can impact the crops part. I would be more worried on that rather than any shortfall, because if Mumbai, for example, is seeing multi-year early monsoon, if Kerala is seeing early monsoon, generally that's a good lead indicator that this time more time is available, and that should mean that rains will be good. We have to be more worried on the excess part rather than the shortage part.
So help us understand then, Abneesh, how does it break it down to investments? I mean, do you bet on a rural recovery, or would you say that the K-shaped recovery would have a wider gap, given that perhaps urban also will see some shift because of the early onset of monsoon? And then, what happens to your typical consumer durables, all those stocks which actually moved up because of an elongated and early summer?
Yeah, you're absolutely right. We have to take very specific calls. It cannot be just that by the more rural focused companies, that will be too, I think, shallow way of running this. What I'll say is 2, 3 things. One is, where is the crop availability good? For example, wheat crop is at a multi-year high. And we have seen that last 3 years, wheat inflation has been impacting Britannia, Nestle. So we would be positive on those two companies, because if there is a good crop availability, the overall inflation on the cost side will come down. Secondly, what we are seeing is definitely in terms of the crude oil also, it is positive for the entire consumption raw material basket for the consumer companies. There again, we see that Godrej Consumer, Hindustan Unilever, and all the FMCG companies from a packaging cost will benefit. Third will be, where is the urban recovery likely to benefit the first and most? Because last 3 quarters we have seen the urban slowdown. Generally in FMCG, we see that the annualization effect does help. So our sense is from Q2 we will start seeing green shoots in terms of the urban recovery, because food inflation is again quite benign. Overall inflation is benign. Two interest rate cuts have also happened. First tranche of April salary and now the May salary, second tranche will happen where the overall tax became lower because of the union government's initiative. The 1 lakh crore kind of a stimulus basket is there. Some worry points on urban are still there. Rents are still quite high, and overall wage inflation remains just 4-5%. That is still slightly a concern, but annualization should help, and we see that definitely the food inflation being low. To play that, I would say that again, Nestle, Britannia, are good play on that. High urban exposure. The liquor shops are something which we continue to like. United Breweries, United Spirits, Pidilite, and Berger. Our sense is the worst of the competitive intensity in paints is behind. And if you see, all the paint companies have given a good outlook in terms of the volumes and margins, which is better than the FY26. ITC again, valuation comfort is there because of the Godfrey Phillips higher growth, which is a regional player, and because Q4 overall margins was expected to be weak. The stock has corrected, good dividend yield, and because of palm oil correction, the FMCG part of the ITC should also see recovery. Plus, the paper business also should see the M&A benefit in the second half. So these are some of the ideas in terms of topics. Summer categories, as of now, will be a bit underweight. So carbonated drinks, for example, talcum powder, ice cream, those will be underweight because demand will be weak in Q1 and Q2 there.
All right. Good morning, Mr. Abneesh. Good morning, Abneesh. This is Shrishti also joining in. But give us some sense on consumer durables as well. What is that you're penciling in when it comes to air coolers, refrigerators, and fans as a category? Do you believe that there's a risk wherein the Q1 sales could actually be lower than what the management has guided in the latest con call with this early onset of monsoon?
I think so. I don't cover those stocks, but yes, when I see ice cream sales are softer, carbonated drinks are softer, I would expect that yes, the demand for such categories also should be weak than initial expectation. In Q1, we have seen across India unseasonal rains, temperatures are quite low, and now if you see almost most parts of the country is seeing very early monsoon, and it will be a very extended monsoon. So yes, that will be a right assumption to make. I don't cover those companies and categories, but yes, we are picking up that overall demand in summer categories across the board is quite weak.
Okay, Abneesh, great to have you on the show. Thanks as always for joining in with that takeaway on what really the implications of this early onset of monsoon could mean.
If you like this video, then like, share and subscribe to ET Now.